Welcome, all traders and investors. This is Anthony with Technical Market Insights. Today, we got a special episode. We're going to go into the biggest winners and losers of the year so far as we're creeping into December. You probably got a lot of people looking at whether or not they want to lock in those unrealized losses or gains for tax purposes. But let's take a look at the charts on some of the biggest winners and losers for the year and see would we be in them? What can we learn from them? If you were in them, let us know below how we could have traded them. And we are going to start with the high cap 1000. We will open up just US stocks overall. Let's take a look at what it brings up. Some of the biggest that you would think. Load maybe. Oh, that's weekly. Yeah, so we'll go through these here in a minute. Well, we are going to start with the high cap 1000, and Carvana is our number one for the year with 642% gain, ladies and gentlemen. That is one huge gain for a year. So if you were in it, let us know how much of it you was able to grab. Was you in it since January? Maybe you're just getting your money back. I don't know. As you can see, it was a biggest loser for quite a while as well. This is when it dropped. I mean, it was $300 back in November of 2021 when it crossed under the 200-day moving average. Actually, it crossed there, and we would have stayed away from it and saved yourself. Still, even being up 600%, you would have saved yourself an 80% drop, ladies and gentlemen. So just keep that in mind here. Carvana up 600% for the year, 642%. But if you were a buyer back here and you did not sell when it crossed under the 200-day moving average, it's up 600% for the year, but you were still down 80%, 88% on your position. That's crazy. Well, let's take a look. So this is the beginning of the year right here in January, and as you can see, I'm not sure what kind of news came out in January, if any, or if the stock chart just started trending back up. I mean, as you can see, it's been oversold. Not really oversold, but just beat down pretty hard. So we would not have touched this under the 200-day moving average unless we were trading on a monthly chart, which the monthly chart doesn't have a 200-bar moving average yet. Be 200 months. It does have a 50, but it would have to be above the 200. Now, we may have entered based on oversold conditions, but you would have still been scaling in, right? It's always hard to find the very bottom of any stock or any market, which is why we have a strategy that we stick to that actually works very well for us. But let's say you were trading on the weekly chart. I mean, it crossed under the 200-day there, and there would have been no entry for us. Now, the only entry we would have made in this stock would have definitely gave us about a 50% gain, I believe, would have been after it crossed over the 200-day, which you can. I spent a while actually just buying stocks after they crossed up over the 200-day, and usually it did give me a pretty good return. As you can see, if you would have bought that here or here, it would have gave you a really good return. Heck, when it crossed over the 200-day back here, and it rallied up 353% a year. And from here, 135%, as high as 270. But what we're looking at is the entire year. So we would have this year probably only traded this stock once, which would have been right in this area. And it would have probably gave you, now it went up 30% in 16 days before it hit overbought. So from here to here, would have gave us 30%. And we would have probably exited. If you would have held a few more days, you might have got another 15%. Thus, not worth it. Then we see some huge red bars down here. And could have traded this here, which would have been you'd still be in it, honestly. Even though it hit overbought here, you've been scaling down your average, which we actually had this in a video a while back. I believe we were kind of watching for the 200 day because it was trending close to it. I believe we even said it was oversold and had a potential of a 40% swing. But considering how much it's ran up so far, some pretty bearish candles. I mean, it's nothing we were really a fan of. Like I said, it is something that we would want to check the PE on, make sure it's making money. So yeah, I mean, the price to book it's overvalued. It's 23. You want that closer to 1, and the PE is negative 14. So it's not really making a lot of money, I don't believe. I'd have to check the earnings, but anything we see that even if we're going to trade it, it doesn't matter. It's got to be a company that we want to hold for 10 years and see a good 10-year outlook on it. The company needs to be making money already, not buying speculation on a company that's losing money. Yeah, so we probably would not have traded any of these. If we did, it would have probably been the first pullback. I mean, it rallied 260% there. So when it comes down after a run like that, the oversold condition, usually it'll bounce pretty hard as well. But it's kind of trending sideways right now. Be cautious watching it going into next year. It's not a company, without digging into the financials, that I would really be trading or holding for the long term. I believe I just heard that Amazon is actually talking about opening up a car sales, basically getting into car sales, which should definitely disrupt the entire car market. And that is what they've done, is disrupt a whole lot of markets, made a whole lot of money. Not knocking them, it's capitalism. Just be cautious on that. But what a great run. Congratulations to anybody who capitalized on that and made some good money. Let's dive into the next biggest winner. So this is Imugen Healthcare Biotech stock that looks to be trending. I mean, I remember this from way back then. And of course, 82% of that is just this week on this top. Did it get bought out? Let's see what happened. Looks like a buyout, by the way. Overweight, price started from 31.20. I'm going to read here real quick. Yeah, so right here, this is what we're looking at. So ABBV, Abiva, wow, has agreed to acquire cancer drug maker Imugen 31. Yeah, so they had a buyout. Nice. Congratulations to whoever was in that. I remember that stock actually a long, long time ago. I mean, let's look how long they've been around. I traded this stock back when I was trading biotech. Yeah, I mean, they've been around for a while. Don't know exactly how they've been doing lately, but looks like they've been doing pretty well. They had a gap up there. That was, I had to guess, probably either an FDA approval or some type of phase 3 data, especially for Abiva to buy. Honestly, you can go back till, yeah, it was in May. This showed overall survival benefit in phase 3 trial. Yeah, so that's ovarian cancer. So that's what happened in May. So yeah, I mean, usually these big companies will buy the winners in that market. You just got to be careful, make sure you're in the right ones. I personally do not trade single biotech stocks. I mean, this thing has been around forever. Obviously, they had to raise enough capital and stick it out through all the phases. So it takes a long time to get to the market. But let's go back. So in January, if you were just buying this sideways trend, dipped under the 200 day, bounced over the 200 day right there for the news. But yeah, I mean, you'd be up as of the last few days, 512% in 10 months. One heck of a gain. Congratulations if you were in that. And if you got out prior to that buyout, which you're probably beating your head against the wall, but trust me, don't look back. Don't regret any trading. Just learn from it. Made money and still got out before the buyout, great. If you lost money and got out before the buyout, yeah, that sucks. But either way, Congratulations to whoever made money in that. That's a 500% gainer this year. Man, a huge, huge gain. So how would you find that? You got to think, ladies and gentlemen, nobody can find, as I just said, the bottom of a stock or a market. You just got to have a good strategy that works, right? Nothing would have told you to buy that in January. Nothing would have told you, maybe right there, that gap up, sometimes gap ups over the 200 day, that could have gave you, hey, go ahead and lock into this, hold for a little bit. Like I said, I traded when stuff goes above the 200 day for a while, and usually you can do pretty well just doing that. But if I got in this, it probably would have been for the gap over the 200 day. Let's see what happened at the end of April, because that is when it gapped over the 200 day. So did something come out before? Yeah, right here. Oh, so it looks like I could have been on this earnings. Yeah, posted a narrower than expected loss. Yeah, as you can see, this company is losing money. Yeah, it was basically an earnings pop. So, if you would have wanted to jump in that on earnings pop over the 200 day, but regardless, we would not have been in that. Congratulations to everybody holding Immugen, which are now in Aviva. And here, I probably do not say any of this crap right. You can knock me for it all you want. Don't really care. I make money. I'm not an English major. All right, we'll go look at our third, which is a firm. May look at the next two, and then we'll look at the losers. But a firm has crushed it this year. Well, take a look at the weekly charts. So you can see some consolidation on the weekly, but it doesn't even have a 200 bar average, so we wouldn't have been in on that. Could have been buying on this oversold and just adding. This is a company you'd like to hold over the long term. You could have definitely been adding on the pullbacks, but I mean, even look here, the weekly. Yeah, I don't know. I'm not a fan of anything that doesn't have a 200 bar moving average, just because that saved me from a lot of losses. Just sticking to that one rule. Take a look at the monthly. It definitely doesn't have a 200 bar moving average. The weekly doesn't. And so January itself was up 67%. Look at the daily, kind of get an idea. So yeah, in January it ran up, tried to break through the 200 day, and then came right back down. Really, to where it was. That was a 2.5 month of nothing. Kind of caught some support here though. So maybe you entered on the support when it was oversold. And I don't know if you kept up with the swings. Let me know if you were in this and held it all year. What made you like it? What made you trade it? What made you hold it? I like the company overall. I said this in one of my previous videos. As far as like what they do to disrupt the market. Now I'm in the automotive industry, and they came out really in the automotive industry to help people take out loans to repair their vehicles. And it was actually one of the best. So a lot of those companies charge you monthly, whether your customers use it or not. So it was definitely the best one to fit the bill for a service department wanting to provide financing for customers who couldn't afford to pay cash to fix their vehicle. Now, personally, I'm not a fan of any type of debt or any type of loan companies. This is almost like a online check cashing, not check cashing, but it reminds me of that, but an online version. One of those ran down places where people can cash checks or borrow money and they get slaughtered on rates. That's personally why I wouldn't like a company. But the only thing I see here that I would have traded, of course, we would have checked PE, which doesn't look like they're really. I have to check into their earnings, but their PE is negative 6.97 on PC 2000. because they're probably not making money. You would think they should be, but check their earnings. Let's see. Probably got their earnings here. Sure, there's been some news on their earnings. Yeah, so go back to November. Firm holdings jump following price target increase amid narrowed fiscal Q1 loss. So I feel like they're still losing money. Yeah, I don't. If somebody walked up in the street and said, "Hey, will you invest in my company? We're losing money every quarter," I'm probably going to keep my money in my pocket. Just my personal opinion. You have to sell me pretty hard on it. So I probably wouldn't have traded any of these, but if I did, it would have had to cross over the 200-day, hold for a swing. This is that close. And, we may have bought in on this swing, which would have got you, 42% in 25 days. Those are the swings we like to see. That's what we do here. We capitalize on market swings on bullish stocks. And then basically we do manage our positions as well. So here we would have maybe if we entered here, looking at the PE, probably no dividend, we probably wouldn't have. But let's say we did, right? We would have averaged, we would have continued scaling in this position. I mean, down as much as 15%. We would have probably scaled in 3 or 4 more times. Let's say our average is right about here. Then we brought our average down here from this point of time. And when it got overbought, we would have exited at about 17% in about 1.3 months. So we would have probably missed this whole rally up here. But hey, I'd lock in profit from one and move to another. Wouldn't be ashamed to miss that at all. Would suck, but trust me, I've been doing this for 23 years. You can't look back and beat yourself up over coulda, woulda, shouldas. And one more monster we'll look at. Look real quick, just because I've seen it down here in the video. Right, it is up. And ladies and gentlemen, this is oversold. We'll be digging into this in our market analysis next video I'm doing. It is oversold, and so is SMH. And this could really break SMH out because it's basically at all-time highs. I mean, the semiconductor sector could definitely rip out, which would be crazy, especially in this environment. But hey, well, only time will tell. Coin is our next biggest winner for the year. Guys, keep in mind, a lot of the biggest winners have been some of the biggest losers, right? We just seen that. Didn't see that in Imogen, right? It was kind of sideways a lot. But Affirm, Carvana, now Coin, right? It's now got a 200-day average there and has been below it. But right here, we're starting to see January, it was down $35. Now we're up to $133. So yeah, it's a huge gain. Crossed over the 200 here, starts trending. I mean, the only time I would have traded this would have been probably right in this area. And it wouldn't have been for big gains. I mean, 11% 19 days, 12% 19 days, which still is as much as some people hope to make in a year on their investment. Right here would have alerted us oversold. Now here, we would have probably sold when it was overbought. Once again, ladies and gentlemen. Unless this is something we like so much we're holding for the next 10 years, and it's in our investment account, which the account we're going to be doing in January is going to be a hybrid account, so we will have some long-term calls and some trading to do. But yeah, I mean, 20% in 10 days still ain't bad. Really, really good. Take a look at some of the biggest losers, and then we're going to jump into the ETFs. So we'll look at the biggest gaining ETFs out there for the year, which are your most safest rides and the biggest losers. I don't even know if I'll get into the common stocks. But biggest losers, ICAP 1000, IEP, which is Icahn Enterprise. We looked at this as one of the daily biggest losers not too long ago. Once again, another turd since it crossed another 200-day moving average. And there's nothing about this stock that I would want to be in it at all. Right? Hey, you never know. Next year, it could be one of the biggest winners, right? But I'm not liking what I see. There's probably nothing on the weekly or the monthly that would make me want to monthly or weekly trade this. I mean, it does. Jeez, that is one heck of a chart. I mean, you could be bottom out monthly, but it is under the 200 days. So I remember all my rules. I follow on whatever chart I'm trading. So like right here on the monthly, yeah, that would have been a monthly swing trade for 60% a year. But right here, it's under the 200 bar on the monthly, on the daily, on the weekly. Company probably, yeah, it doesn't look like they're making money, which is crazy. That is one of your biggest losers for the year, ladies and gentlemen. When you lose 66% in a year, it can be devastating to your portfolio. You got to understand, if you got $1,000, it's going to take you down to 3,500. If you got 100,000 in the market in this position, it's taking you down 35,000. I mean, those are huge losses and very hard to recoup. Right, the best way to avoid those losses, my personal opinion, stay away from anything under the 200-day moving average. You should be able to see that on this video, on this channel by now, because we constantly see it. The second biggest loser, ENPH, Enphase Energy. Solar company, crossed under the 200-day moving average there. Actually, like basically the beginning of the year. And that rule alone would have saved you from losing 60%. All right, and I'm not even going to pronounce that. Biggest loser, basically crossed under the 200-day in January as well. Would have saved you. But darn it, look at that. Huh. Ladies and gentlemen, look at that gain right there. 1,500% gain. You would have held through the COVID bullcrap. That's crazy. And now it's one of your biggest losers of the year. I'm sure they would love for COVID to be a thing again. All right. And 200-day, stay away. That's simple. Yeah, no reason we would be in that. Let's look at the biggest ETFs. It's good to go through all of these and just kind of study them out. I'm not going to make the video take that long. Definitely do it on your own. Worthwhile. One of the biggest winners as far as ETFs go is Granite, which is leveraged at 1 point. Granite shares 1.5 long coin daily ETF. This might be a leverage based on coin, if I had to guess. I believe was one of the biggest winners of the year. That makes sense. Yeah. I believe, look at it, looks identical. Without me like searching what that is. I believe it's a leveraged version of coin. So leveraged ETFs are what we trade when we trade really any ETF or anything you like to trade. For instance, this stock right here, this is a long NVIDIA stock, leveraged. So every one of its swings, that's your second biggest. Right, NVIDIA was up 220%. This was up almost 400%. So if you were holding NVIDIA, again, probably saying wrong, don't really care. This may have been the way to trade it or hold it, which we would have just been in the semiconductor ETF. This is a FANG technology, up 356%. So a lot of these you're going to see are going to be leveraged. Just kind of click down to see if there's any where we get. This is a meta leverage. So as you can see, they come out with leverage just about everything. This is natural gas. And what we're about to do here in a second, I'm going to change this to sector indexes. Let's just see what sectors. All right, we had the nutraceutical up 45%, technology up 40%, industrials. Really, the only sector that lost for the year was utilities, down 5%. So overall, sectors did pretty decent for the year. Your average will probably be about 10%. The overall market, we can probably see that in Dow Jones. You go to the SMH, 58% for the year. And if you would have bought that in January when it was oversold, even though it's under the 200-day, we would have been at SOXL, which is up 138%. Again, we trade the leverage. Triple Q's up 46%, which would have gave you 155 on the leverage. S&P 500 up 20%, would have gave you 50% on the leverage. And that's, of course, if you're holding all year. Dow Jones up only 10% for the year. Why it was the biggest weekly besides these two, because it got more ground to catch up. XOP up 2% for the year. Let's just look at your worst ETFs out there, which will probably be like your inverse. It's really not worth getting into. Ladies and gentlemen, those are your biggest winners and losers for the year. Congratulations on those who brushed it in those. If you had a position in those and been holding the whole year, let us know why you bought it. Did you just like the company? Was there something a strategy that made you get in it? Make sure you comment, leave some feedback, hit subscribe, turn on your notifications. And I hope you guys are preparing for 2024. I know I'm ready to kind of put this transparent account online and just crush it. And it's going to be one of those crazy years. There's a lot of crazy things happening out in the world. It's an election year. Economy's tightening, from what I can see personally. Just here's SMCI. That just caught my eye because we've been covering this for a while. Actually, if you go to my website, makecashwork.com, this thing was up 300% from one of our calls. I think our first call from it being oversold in a bullish chart. Definitely should have added that to my long-term portfolio instead of just trading it, but hey, whatever. Definitely a very bullish chart. It ran up really, really well. Let us know what kind of year you had. Leave some feedback, subscribe, and you guys have a good one.